Good afternoon. Thank you all for joining me today for this discussion on things to consider after taking a coronavirus-related distribution from your 401k account. This will be a fairly brief presentation. We're going to go over a very focused topic today on what to consider if you are or someone you know took a coronavirus-related distribution from your retirement account. We're going to go through what is a coronavirus-related distribution for those that may not be familiar or may just need a refresher. We're going to talk about how it affects you, how you can get back on track, and who to contact with questions. So before I jump into the content here, just want to give a quick little housekeeping tip. If you do have a question during the meeting, please put it in the Q&A box. There should be a Q&A button across the bottom of your screen there. Feel free to throw any questions in there, and I will try to answer them as best as I can during the presentation. So like I said, what we're going to talk about today is just an overview of first of all, what is a coronavirus-related distribution, a CRD? Then how does it affect you? How does taking one affect you and your ability to meet your goals? How can you get back on track? And who to contact with questions, where to go for help. So first of all, what is a CRD, a coronavirus-related distribution? A CRD is something that was created as part of the CARES Act, which was the relief bill passed by Congress. And it's a distribution from your retirement account, either a 401k, 403b, IRA, up to $100,000 or 100% of your account, the lesser of the two, which can be repaid over 3 years. And a CRD can be taken from your account regardless of your age without paying a 10% tax penalty. And your taxes can be paid over 3 years as well. So to be eligible for a CRD, a coronavirus-related distribution, you, your spouse, or dependent must have contracted the virus or must be experiencing financial hardship due to the coronavirus and the subsequent shutdowns and everything that happened about there. So that includes hours cut, loss of job, or if a spouse had to leave their job in order to stay home with the kids that are now not in school. You know, if they're on school virtually and the spouse had to either leave their job or take reduced hours in order to take care of the kids, that also qualifies for a coronavirus-related distribution. So the question down there at the bottom is an important one. Is it a good idea to take this? And the answer is, it could be. You know, it really should be an option of last resort. You know, the goal is for that money in your retirement plan to be invested for a very long period of time. It's money that should be there as a pool of money for you in retirement to draw from to replace your income when you do hit that age that you want to retire. So to take a distribution, you typically have to sell investments, which means, you know, in the case of coronavirus, selling when the market is down. And, you know, you can, it's very important to consider all of these things before you take that distribution. Now, that being said, they are there for a reason. This coronavirus-related distribution was created because people are experiencing significant financial hardship. People were having a very hard time. They were losing jobs, they were losing hours, they were losing income, and so they needed an option to fill the gap. And so this was created for that. So if you were in that situation and you took one of these distributions, that is perfectly fine. That is what it's there for. It's there for you to use if you were to need it. But now that you have taken one, if you were somebody that ended up needing to take a coronavirus-related distribution, it's important to know how it affects you. You know, what is this going to do this year from a tax standpoint and other standpoint, and how do we get back on track now that we've taken one? And I did have a question come into the Q&A that I'll address here before I move on. Aren't spousal-owned small businesses that had losses also a reason for this distribution? I believe so, yes, that also qualifies as a reason for this distribution because that would qualify as financial hardship. It's a fairly broad definition, and it's a self-certification process for this distribution. So it's kind of up to you to tell the IRS why you took the distribution, what hardship you were experiencing in order to qualify for that distribution. So let's talk about how a CRD, a coronavirus-related distribution, affects you. And we're really going to talk about this on the basis of 3 topics. We're going to talk about eligibility for social assistance programs and Medicare premiums, things like that. We're going to talk about taxes and how your taxes may be affected over the next 3 years, and your ability to meet your retirement goals. So let's talk about social assistance for a second. Obviously, social assistance programs are very broad, and there's a lot of different qualifications for those programs. But the lines are very tight. So if you took one of these coronavirus-related distributions, it could affect your eligibility for certain social assistance programs like CHIP, SNAP. If you receive a premium subsidy from the Affordable Care Act, that could be affected, or different HUD programs like rental assistance programs, things like that, could be affected because of the increased income that you have. So if you don't pay back the CRD that you took from your retirement account, it is treated as taxable income and will count towards determining eligibility for different social assistance programs. Keep in mind that you can spread the taxes out over 3 years. So doing that could help mitigate some of these issues. If you didn't take a large distribution, or spreading out maybe a larger distribution over 3 years could help keep you under the line for some of these different programs. Depending on the amount of distribution and your income, you could experience some changes in your eligibility. Otherwise, you might not get certain benefits that you did receive, or you might get lower benefits because you have higher income and higher assets. Keep in mind that programs like SNAP also have asset tests. So if you did take a coronavirus-related distribution and still have some in your account, in your bank account or something like that, that could qualify, that could be counted as an asset test for benefits like SNAP and could potentially affect your eligibility for that program. So if possible, if you do have leftover distribution, if you didn't use it all, if you took it but you didn't end up needing it, repay it into your 401k or your retirement plan. You are able to do that. That's part of the provisions of this coronavirus-related distributions, that you can repay it to your retirement account. And that should help you avoid some of these issues. So if you have that money left over, put it back into the plan. Because when you do that, not only do you not then have that asset that meets the asset test, but you also do not have to pay taxes on it, so that erases it from your taxable income, and therefore you might not have these issues with eligibility for the social assistance programs. Likewise, Medicare is also Medicare premiums, specifically Part B premiums, are based on modified adjusted gross income in what we call IRMA brackets. So IRMA brackets determine how much you're going to pay in Part B premiums for Medicare. So if you took a coronavirus-related distribution, that will be added to your modified adjusted gross income for IRMA calculations for the purposes of determining how much you're going to pay for Medicare Part B. So if you took a coronavirus-related distribution, you might see your Medicare premiums go up in 2 years. Keep in mind that these brackets, as you see there on the chart, they're determined using the 2 years prior income federal tax returns. So 2 years from now, you may see an increase in your Medicare Part B premiums depending on how much you took in a coronavirus-related distribution, whether or not you paid it back, and how much in taxes and additional income that included and that provided for you for the purposes of modified adjusted gross income. So from that standpoint, from the social assistance program standpoint and the Medicare standpoint, there are some real impacts that the coronavirus-related distribution could have on your ability to afford these programs. In the case of Medicare, it could increase your Part B premiums. Or if you receive social assistance, it could affect your eligibility for social assistance programs. So it's important, if you have leftover coronavirus-related distribution, pay it back into your retirement account. That's definitely something that you should consider doing if you do have that left over and you're able to do that. It would make a lot of this stuff much better for you. There are also tax consequences to the coronavirus-related distribution. So Again, if you took the CRD, you have to report it as income on your tax return. The provisions of the distribution allow you to report the income evenly over 3 years. If you repay the CRD either partly or in full, you're not required to pay taxes on the repaid amount as long as you repay it within the 3 years. You can only repay it within the 3 years. If you've paid taxes on the distribution, a third of the distribution, and then you pay the full amount back, you can get a tax refund for the amount that you paid. You just have to go back and modify your tax filing for that year. So, for example, if you took a distribution and you paid 1/3 of the taxes in 2020, and then you repay the full coronavirus-related distribution in 2021, you can go back and modify your 2020 tax returns to remove that reported income and potentially get a tax refund back of the additional tax that you paid. Keep in mind there is no 10% withdrawal penalty. So even if you're under 59.5, the 10% penalty that would typically apply for the distribution from a retirement account does not apply to a coronavirus-related distribution. And there's no 20% withholding requirement. So normally, when you take a distribution from a employer retirement plan, they're required to withhold 20% for taxes of that distribution. For the coronavirus-related distributions, that is waived. So let's just look at a quick illustration of what that looks like. So if you were, let's say you took a $15,000 coronavirus-related distribution in 2020, your taxes over the next 3 years are going to look like this. You're going to have $5,000 of reported income in 2020, $5,000 in 2021, and $5,000 in 2022. So that's going to be added to your taxable income for the year. So that's what you would report on your tax return. And to report the CRD, it's going to be reported in two places. It's on a normal income tax filing, so just on your normal 1040, and then also using the form 8915E, which the IRS is releasing for tax time. Any repayments of the coronavirus-related distribution will also be reported on that form 8915E. Now, you can choose whether to report the income over 3 years, or if you want to, you can waive that 3-year reporting and report the full distribution in 2020. What you can't do is wait and report the distribution in 2022 to pay taxes on it then. You have to report it either a third in 2020 or the full thing in 2020. And so really to decide which filing method to use, it really depends on the size of your distribution and your tax situation. In some cases, it might be more beneficial to just report the full thing in 2020, assuming that maybe your income goes up in 2021 and 2022, and maybe you don't have as much income in 2020 because, say, you lost your job early in the year. It could be advantageous for you to report that all in 2020. Whereas if you have a more stable income situation or your tax bracket's a little bit higher, it may be more advantageous to spread it out over 3 years. Keep in mind, again, that if you, regardless of whether or not you decide to report it all in 2020 or spread it out over 3 years, you're still able to recontribute the distribution within the 3-year period. So if you decided to report all of the tax liability in 2020 and then repay the distribution in 2022, you could, again, go back and modify your 2020 tax filing to report that. So keep that in mind when you're making this determination. It's important to know what your personal tax situation is. I would highly recommend talking with a tax professional if you did take one of these distributions when you're filing your taxes for the year, because it can be fairly complicated, and it's a new form, new provision. So I'd expect there to be some more complexity with your return if you did take one of these distributions. So definitely talk to a tax professional when you're filing your taxes for the year. So how does taking a CRD affect your retirement? So if you took the coronavirus-related distribution, this is a really important question to ask, because obviously this is your retirement account, and we've taken a withdrawal from it. Potentially the entire account has come out. So what is, how does that affect your ability to meet your retirement goals? Can you still retire when you want to? So you need to consider those effects, right? To consider the effect of the early withdrawal on your retirement goals and what steps you need to take to get back on track. So let's talk a little bit about compound interest, right? So compound interest is the eighth wonder of the world, right? That's what we really benefit from when we leave our retirement account alone. That's why we say it's a long-term account, because you get that benefit of compounding over time. When you take that withdrawal from your plan, you lose the benefit of that compound interest. You've taken that money out. It's no longer earning that interest. It's no longer earning that compounding. And really what we're doing is starting over. The difference, though, with the coronavirus-related distribution is it gives you an option to repay that within 3 years and get it back at least somewhat on track. So the chart on this screen shows you two different options here. So it's a $15,000 coronavirus-related distribution, right? We talked about that, the $15,000 withdrawal in an earlier slide. We're assuming a 5% interest rate compounded annually and no additional contributions to the plan. So that green line is assuming we just left it. We didn't need to take the distribution. We had other sources of money to kind of weather the storms. We were able to leave our retirement account alone with the $15,000 in it. As you can see with compound interest, by the time we get 15 years out, our money has a little bit over doubled in the account. The next line, the black line, is what happens if we take that distribution in year one. So we remove the full $15,000 in year one, and we pay it back in year three. So in the third year of the coronavirus-related distribution, we end up with a windfall. We're able to save enough money where we can pay back that full coronavirus-related distribution to our retirement account. As you can see, we've lost about $5,000 across the board by the end of that account balance in compounded money. However, we still do get somewhat back on track by repaying that money into the account. So again, I'll say, if you're able to put that money back in, if you have some of that left over, or if you're able to save, hopefully your income situation has maybe stabilized and you're able to save enough to put some money back into the plan, even if it's not the full distribution, getting something back in there, getting it back on track and compounding will help benefit you and help keep you on track or get you back on track for that retirement goal. And as you can see here on this illustration, it's that compounding that really matters. The longer we can leave it in there untouched and allow it to grow, the better off we'll be down the road towards our retirement goals. So how can I get back on track, right? If I'm somebody that took a coronavirus-related distribution, what can I do to get myself back on track, get myself on better financial ground, so that either I don't have to do it again, I don't have to take another IRA distribution or retirement plan distribution to fund any emergencies that I have, or really just get my retirement plan back on track and make sure that I'm able to meet my goals. So the first one is to establish an emergency fund. This is key. This is crucial. The reason that a lot of people had to take that coronavirus-related distribution is because they just didn't have any money saved for emergencies, for these cases where you have a gap in income, where you have a job loss. You want to put some money aside in order to fund that. If that were to happen again, if that does, God forbid, happen to you, you want to make sure that you have some money off to the side to fund your lifestyle while you're finding another job or looking for getting another source of income. So establishing an emergency fund is key. That should be step number one. Get yourself in a place where you're putting money off to the side that is just for emergencies. In a separate savings account, we label it emergency fund if you need to, but just put some money away every month as much as you can into that emergency fund. You want to have, for a single individual, at least 3 months of savings built up. For a family, 6 months at a minimum built up in an emergency fund. So, to keep that in mind, that should be a goal of yours if you were required to take a coronavirus-related distribution, or even if you didn't need to and you just don't have that emergency fund, get that emergency fund established. That's incredibly important. You want to have that money there in case something does happen. make sure that you put some money aside for taxes. Now, if you took a coronavirus-related distribution, you have to report that as taxes. Depending on the size of the distribution that you took, you may end up owing taxes this year. So you want to make sure that you have some money aside in a savings account to use towards taxes when filing does come due. If you can, like I said, probably 1,000 times on this meeting, repay the CRD. If you have it, repay it into the retirement plan. There's no reason to keep that there and pay taxes on it. If you are comfortable, if you're financially stable, if you feel like you're back on track from an income standpoint and you don't need that money there anymore, put it back into the retirement plan and save yourself some money on taxes. If you did take it and you ended up using it and you need it, to keep it in your savings account, increase your retirement plan contributions. You pulled that money out, we need to build it back up. So think about, increasing your contribution rates by 1 or 2%, if you're able, assuming your income is back on track. Try to increase your retirement plan contributions. At the very least, make sure you're capturing your entire employer match. If your employer matches your contributions, make sure that you're getting that entire amount, because that's going to boost your savings. It's an automatic boost to the amount of money that's going into your plan account, and that'll help you get back on track a lot quicker the more you can contribute to that retirement plan. And of course, last but certainly not least, speak with a professional. Talk with a tax professional when you're filing your taxes to make sure that you're choosing the right option for you. Whether you're claiming the entire CRD for 2020, if you're going to spread it out over 3 years, make sure that you talk to somebody that knows, talk to a professional that can help you make the right decision. Talk to a financial advisor. That's what we're here for at Greenspring. If you still have questions, you can definitely reach out to us. If you're a participant in one of the retirement plans that we work with, definitely reach out to us and schedule some time, and let's talk through how we can establish that emergency fund. Let's take a look at your budget and figure out where we can find some room to establish an emergency fund or increase retirement plan contributions. Let's take a look at your retirement plan. Let's build a retirement plan and see if you're still on track or what adjustments we need to make to that plan. Definitely reach out to us. We're certified financial planners. We're happy to help anytime. So if you have those questions, if you have concerns, if you took one of these distributions and you're not sure what to do next, definitely reach out to a professional. There are people ready and willing to help you make these decisions. So again, if you still have questions and you're a participant in one of the plans that we work with, definitely reach out to us at Greenspring. Our participant website, Clarity at Work, it's www.greenspringadvice.com. All you do is create an account with your employer email address, and then you can schedule a one-on-one with me, Molly, or Cindy, our certified financial planner professionals. We're here to help. We can answer any of those questions that you have about your personal situation, or call our advice hotline. Again, if you're a participant in one of the plans we work with, call that advice hotline. It's 833-552-7489. We are ready and willing to help you answer these questions, make the right decisions for you and your family regarding this coronavirus-related distribution. So I want to thank everybody for joining today, for watching this, for listening, for giving me the time. I hope that you found this to be informative regarding the coronavirus-related distributions and some steps that you could take in order to get yourself on the right track if you did need to take one of those. Again, if you have questions, contact information was on the previous slide. Recording of this will be made available as well. Thank you again for the time, and I hope everybody has a good rest of their day.